This is the moment the global financial system has feared for 40 years. It has started. While everyone was watching China slowly trim its U.S. Treasury holdings, the real giant has just turned its back. Japan, the single largest foreign holder of U.S. debt, is officially exiting the building. This morning, January 13, 2026, we are witnessing the Great Repatriation. The Bank of Japan has just signaled another rate hike, pushing Japanese yields to their highest levels since the 1990s. The carry trade, which provided the world with cheap dollars for decades, is collapsing in real time. The U.S. Treasury has lost its most loyal lender, and the resulting vacuum is sucking the life out of the dollar and blowing the lid off the silver market. Silver hasn't just gapped to $86, it is becoming the only exit door left. Why is this bigger than China? Understand this: China sells U.S. debt for political and strategic reasons. It's a slow, managed divorce, but Japan is selling out of necessity. The Sananomics policies under Prime Minister Takaichi have shifted Japan's priority to domestic reflation. With a 21 trillion yen stimulus package and Japanese labor unions winning 5% wage hikes, the Bank of Japan can no longer justify holding $1.1 trillion in U.S. paper that is losing value. Japan is pulling its money home to fund its own survival. When the world's largest creditor stops lending to the world's largest debtor, the interest rates in the U.S. have nowhere to go but up, and the dollar has nowhere to go but down. This is a structural break in the global architecture. For 30 years, the world operated on a simple trick: borrow yen at 0% interest, sell those yen for dollars, and buy U.S. Treasuries or tech stocks. This carry trade created a fake demand for the dollar, but that trade is now a suicide mission. As Japanese rates rise, the yen is strengthening violently. Every investor who borrowed yen now has to buy them back at a higher price to pay off their loans. This is triggering a massive liquidation of U.S. assets. We are seeing trillions of dollars in paper wealth evaporate as Japanese institutional investors dump their U.S. bonds to cover their positions back in Tokyo. The spigot of Japanese liquidity has been turned off, and the U.S. financial system is about to find out how thirsty it really is. Now, look at the silver market. Why is silver the only functional exit? Because gold at $4,600 is already being hoarded by central banks. The big money is already there. But silver is the high beta alternative that is currently facing a 200 million ounce structural deficit. As the Japanese sell-off hits the U.S. bond market, the safe haven trade is rotating into silver at a speed we've never seen. Unlike the dollar, silver cannot be printed by the Bank of Japan or the Federal Reserve. And unlike the yen, silver doesn't carry the debt of a dying empire. We are seeing a 160% surge in silver prices since last year because it is the only asset small enough to be squeezed and large enough to protect billions in fleeing capital. The gap to $86 is a warning shot. In London and New York, the paper silver shorts are being vaporized by the sheer force of Japanese and Asian physical demand. The U.S. Mint has already signaled an 8-week delay. This isn't just a high price, it's a total lack of supply. When the Japanese pension funds decide that even 5% of their $1.1 trillion portfolio should be in hard assets, the silver market, which is a tiny fraction of the debt market, will go to $100 to $100 or even $400 in a matter of weeks. We are transitioning from a world of unlimited paper to a world of limited physical, and the Japanese exit from U.S. debt is the catalyst that makes this transition permanent. The Japanese canary in the coal mine has died. The world's largest lender is now its own priority. The U.S. Treasury is facing a liquidity crisis that no amount of Fed printing can solve without destroying the currency. The $86 gap is the market's way of saying thank you to the paper system. If you are still holding U.S. debt or 100% USD assets, you are betting against the entire nation of Japan. That is a losing bet. The exit is narrow, and the crowd is starting to run. Secure your physical silver now, before the 8-week delay becomes a permanent out of stock. Subscribe to Survival Economics to track every Japanese rate hike and every COMEX vault drain. The Great Reset has a new leader, and it's wearing a Japanese flag. Stay in the physical. I'll see you in the next report.